So welcome everyone. Thank you all for coming. Before we start, if you're able to, if you could turn on your camera, I'd appreciate that. Of course, if you can't, no worries about it. And so I want to start off by introducing myself. I'm Ethan. I come from Frisco, Texas. I'm a junior, and I'm the host of this DataRizon meeting. For those unfamiliar, DataRizon is a nonprofit organization that is to create opportunities for our generation, for future generations to explore data science as a whole, as big data becomes more and more popular, in every field of study. And so I would also like to thank Global Youth Philanthropy, which has helped a lot as a partner association for DataRizon. For those that don't know about GYP, it is another nonprofit that helps youth turn their passion and ideas into innovative philanthropy projects that will help them grow as leaders in society.
这个包的，就原来我这都揪了哈，你看包的中间这种。
I'd like to introduce, we have a very special guest speaker. This is Dr. Nishi. He's a professor at UTD as well as the director of the undergraduate finance program there. And he's going to touch upon subjects such as data analysis and mainly business and finance majors. And then I'll let him explain the details. So without further ado, take away, Dr. Nishi.
All right. Thank you, Ethan. Let me share my screen first. Yeah, second. Okay, you need to let me, hold on. Yeah, Ethan, I think you need to allow me to, share my screen.
Give me a second.
Yeah. 这个人我认识吗？
Okay.
Yeah, there you go.
Okay.
Yep. Okay, do you see a pop on screen right now?
Yes, I do.
Great. All right. Hello, guys, and thank you for inviting me tonight. My name is Hiro Nishi. As Ethan said, I'm an associate professor of instruction at UT in Richardson, Texas. And I'm also serving as a director of BS Finance program. BS stands for Bachelor of Science, so that's the undergraduate finance program. So I would like to talk about data science in finance. My presentation tonight can be divided into two parts or two topics. Topic one is about, of course, data science in finance. And topic two is about the undergraduate finance program. So topic one, I don't teach finance. I don't teach data science at the UTD, but I do some research in finance. So I'd like to use a paper I wrote about a couple of years ago as an example. Now going over how I collect the data and how I analyze the data using a technique called difference in differences regression. So that would be topic one. I try not to be too technical, but if you have any question, just let me know. That's topic one, and topic two is about the finance program. Now, Ethan asked me to talk about the admission process at the university. And that makes sense because many of you guys are junior or senior at high school, and you guys are going to face that admission process in 1-2 years. But unfortunately, I just don't know much about it because at the UTD, we have an office of admission, and they handle admission for the entire university. So it's not done by each school, like a business school or program, such as accounting, finance, and marketing. We don't do it. The whole university does that for all the programs. So I can't talk about that, but instead I can talk about the finance program, what the program looks like at the university, what kind of skills employers are looking for typically from the undergrad students. So that is something I can talk about it. And I'm not trying to promote our program here to you guys, but I'll be using the BS Finance program at UTD as an example because I know how we operate the program and I have some access to some resource. So I will talk about it to you guys in the topic number 2. I think I'll spend about 15 minutes each. So that is my plan. Okay. So data science in finance. if I say data science or people say data science in finance, many people think about investment like a stock market. Now, that is not something I do here at the UTD or as a researcher. I mainly focus on the corporate finance. So the topic on my paper, the paper I wrote 2 years ago, is about the 2015 Paris Agreement. Now, as you may know, the Paris Agreement is a global agreement joined by many countries to fight the climate changes. So it was adopted by 196 countries, including the US, that keyword, that point, including the United States in December 2015. Now, what happened is the US President Donald Trump made an announcement in 2017 saying that he's going to withdraw the US from the agreement. He's saying, hey, that is not a fair agreement for the US companies. Maybe it is for Chinese or European companies, but not for US companies, so that's not fair. So he said he's going to withdraw the US in 2017. Now, here, I'm not asking a political question here because this research is about finance or business in general. My question is how the US firms responded to the announcement. To be more precise, specific, I want to know by how much or whether they increase the amount of effort or investment in the emission reducing initiatives or they decrease. They may increase it because they cannot stop what they have started, or they have some other idea or some objective, or those companies started to decline or reduce the amount of effort or investment they're making in the emission reducing initiatives because we are no longer part of the Paris Agreement, and they may be seeing or expecting less regulation in the US. So either way, we find out. So that is my research topic here, or research question here. So let's talk about the data source. I say how much companies are investing in the emission reducing, but I don't think we have a way to get the data amount of the investment each company is spending on the emission reduction or anything about environment. Maybe there's a way to do that, but I don't have access at the UTD. So as a proxy, I use a refinitive ESG score. ESG stands for environmental, social, and governance, as in corporate governance. So refinitive has a ESG score assigned to each company each year in each of the 3 categories: environmental, social, and corporate governance. And each category has 3 or 4 subcategories. Now, of course, my topic is about the Paris Agreement, so I'm focusing on the environmental category, which has 3 subcategories: emissions, resource use, and environmental innovation. Emission is about firms' effort to reduce emission amount. That's very simple. Resource use is a firm's effort to use eco-friendly materials or try to find efficient solutions. That's number 2. And number 3, environmental innovation. The name is a bit confusing, but what it is how much effort companies making to reduce the burden on the consumers in terms of the environmental initiatives. That's number 3. So again, we have 3 subcategories, well, also 3 scores under environmental. Now, the ESG score of any company can be driven by some other factors other than Trump's announcement or other their objective about the global warming. For example, company size, turbine skew, tangibility, leverage. Any of these can affect the company's effort or investment, what they can do about the environmental initiatives. So I'm including these 4 other control variables, meaning they are part of the regression model to control, okay, large firm may have more money and they can spend more money, but that is one factor. But on top of that, how much impact we see from that Trump announcement. So size, I'm using a total asset as a proxy of the company's size, how big the company is. Turbine skew is basically it is a ratio of the firm's market value to the book value. That's Tobin's Q. Tangibility is a percentage of the long-term tangible asset of the company to the total asset they're holding. That's tangibility. Leverage is used a lot in financial research. It is a percentage of the debt to the asset, meaning how much of the total asset the company is holding was financed through issuing debts, such as bonds. That's what the leverage is in this example. So again, I'm using these four variables in the regression to control some of the factors or effects. Now, for the data, I'm using Center for Research in Security Prices, CRISP for the security price or stock price, and CompStat to get the financial statement data. The data coming from the balance sheet or income statement. Let's talk about the methodology or analysis. So as I said, I'm using a difference in differences regression models or DID regression. Now, as the name tells you, we are looking at the two types of differences. One is the difference in terms of the time or years. So I'm dividing our period or sample into two sub-periods. One is a pre-treatment period. That period includes all the years up to 2017 when Donald Trump made an announcement. The other one is a post-treatment period. This includes the year 2018 and beyond. That way, we can see the impact of the Trump announcement, or we can compare the ESG scores before the announcement and after the announcement. So that's one difference here. The other difference is the difference in terms of the sector or business profile. Here, we have a treatment group. This is a group of the companies I'm trying to analyze mainly. The other one is a treatment group, control group. This is here for comparison purpose. The treatment group has includes companies in the carbon-intensive sectors or industries. Namely, these are mining, gas and oil extraction, utility, transportation, and manufacturing. Meaning these are companies that tend to pollute, I would say, pollute more CO2s to the world. So they're under more scrutiny by public, and they have more incentive. Maybe they have more regulation, facing more regulation. They may have more incentive to spend more money or make some investment to reduce emissions. That is one group. The other one is a control group, meaning other companies who don't pollute much, like IT companies or banks. They don't pollute much. So again, I'm trying to see the difference between the years first, before the announcement, after the announcement. Then take a differential, and within the differential, I want to see how much of the differential is coming from the fact the company is in the carbon-intensive factor or happen to be a carbon-intensive firm or not. That's why it's called a difference in differences. I'm comparing two differences or difference within the difference. That's why it's called a DID regression here. And I'll go over the actual model soon. So before that, let me talk about look at some visual thing. So the first graph here shows the emission scores by the US companies, and I'm dividing the score into two groups. Based on the this second group here, second difference, one treatment, the other control group. So the blue line here indicate the non-carbon intensive firms, meaning they're not polluting much. They're not polluters. The red dotted curve indicate the carbon intensive firms. So as you can tell, up to 2018, the ESG scores of the carbon intensive firms tend to be lower than the score by non-carbon intensive firms. Again, up to 2018. Then after 2018, the scores by carbon intensive firms pass the scores by non-carbon intensive firms. So something happened in 2018. That is one thing about the emission score here. Likewise, for resource use, and the scores by both carbon intensive and non-carbon intensive firms, they are about the same level actually until 2018. Then the score by carbon intensive firms, again, the scores by polluters started to go up a lot, while the score by the other sector or group remains the same. So something happened here. So for both, we see some impact of something that happened in 2017-18 timeframe. So these are visual observations. Now these are good actually, but that's not enough, right? So we gotta do something about statistics. We gotta do some statistical test. That's where my DID model kicks in. So this is the actual regression model here. The dependent variable is a log of the ESG score, actual score of each firm in each year from 2015 to 2020. So 3 years before the announcement and 3 years after the announcement. Now, what I want to focus on is these two, post and the treatment. Post is a dummy variable that takes on a value of either 1 or 0. You will take a value of 1 if the year or score is reported in year 2017, in 2018 or after. Meaning you take a score if you take a value 1 if the score is after the announcement. Otherwise, you show a zero value. Zero value means the score is a score reported before the Trump announcement. That's post. Treatment is another dummy variable. You take a value of 1 if the company happen to be in the treatment group. If the company is a carbon intensive firm, then this value would take a value of 1. This variable would take a value of 1. Otherwise, if the company is a non-polluter, then you take a value of 0. So this would check, post would check whether the score is before or after that Trump announcement. Treatment would check or test whether the score is coming from the carbon intensive firm or not. Then what I'm really focusing on is the other guy, post times treatment. It's called our injection term. This term, injection term, indicate or test the impact of the Trump announcement, impact or effect on the ESG score based on the fact the score was reported after Trump announcement and based on the fact the company is in the carbon intensive firm. So these two factors combine and the effect will be shown in this variable or in the coefficient beta sub 3. The result is here. Again, I'm not trying to be very technical here, but what I want to focus on is this guy. So these numbers here shown here are a coefficient. These are in the regression model. These are beta 0, 1, 2, 3, and other things. Now, again, what I want to focus on here is the beta 3 for post-time treatment. As you can see, we have some positive numbers or positive effect of the treatment effect after the Trump announcement, and given the fact the company is a polluter or carbon intensive firm. That is this guy, 0.085 and 0.149. Now, the number of asterisk or star indicate the p-value. 2 stars means p-value is less than 5%. What that means, in plain English, what that means is this number, yeah, I do see a positive effect of that treatment or Trump announcement. And this 2 star means there's the probability that this number is by coincidence is less than 5%. Meaning most likely this is not coincidence. This is a real effect that we are observing and reporting. That is shown here on the emission and the resource use, not for the overall ESG score or environmental innovation score. What that means is that, yeah, we do see some number here and here too, but either number is not large enough, not much economic impact, or maybe the variation among the company or among the year is too big, so it may be coincidence. That's what it means. Anyway.
这回想的，你可以呼吸里天嘛，跟我讲一些资料，我讲你这些假使要起码的种嘞，要这么的种好了，是这么子。
Thank you. So that's what we see in the image in the regression model here. So the conclusion here, actually we did more tests here, but the conclusion finding from this table here is so the increase in the ESG score by carbon intensive firm outpaced the score by non-carbon intensive firms after the Trump announcement. What that means is that those companies, again, those polluters are spending more money, making more effort, more than the effort done by non-carbon intensive firms after the Trump announcement. That would be backward or opposite what we're thinking actually, because we are thinking initially that those carbon intensive firms may lose the amount of effort they're making on the ESG initiatives because we were no longer a part of the Paris Agreement. We are expecting less regulation under the Trump administration. So they may be reducing the effort or amount of investment, but that's backward. They're investing even more money, more than before, and more than the amount of effort done by non-carbon intensive firms after 2017 or after the Trump announcement. And the possible reason why is those companies may have viewed the Trump announcement or Paris Agreement exit as an opportunity for them to send a signal to the general public. The signal would be like, okay, we may no longer be a part of the Paris Agreement, but we won't stop our commitment. We will continue our commitment. We won't stop investing more and more money or making more effort on the initiatives to reduce the carbons in the world. That may be one possible explanation. Now, as I said, we did more tests, and I'm not showing on this slide here tonight, but another test shows this tendency is even stronger for the companies with a high public attention. The public attention, I use a Google Trend search volume index. I was using a Python code to retrieve the index for every company every year over 6-7 year period and try to see the difference between the index and try to make another difference or another subgroup. One group has a high public attention. The company that has a high Google search volume index, the other one has a low Google index, and try to see the difference between the high public attention company and low public attention companies within this treatment group. The result is this effect, the treatment effect, is even bigger for the companies that has a high public attention. That indicates that companies' view on the Paris Agreement exit, like viewing this exit as an opportunity to signal their effort or their commitment to the general public, is even stronger for the company who have a higher public attention and more scrutiny by the public. That is the conclusion we made on this paper. So that is topic number one about the research paper I wrote about 2 years ago. Do you guys have any question about research here? I don't mean to stop here, but this may be a good stopping point or time to, for you to ask me any question about research. The reason why I'm asking you is, we're gonna switch to a different topic. Topic number 2 is about undergraduate the finance program. That would be a different topic. So this may be a good time to for you to ask me any question if you have anything.
Yeah, Dr. Nishi, well, thank you for that. And I just have one question is that, before people start to get into research, would you have like any general advice on like how to prepare yourself for it? Or like how to learn the, what to do to help prepare you to do this research?
Good question. Good question. I'll tell you, I have a Bachelor of Economics, an MBA in finance, and PhD in finance. These are 3 degrees I have. To be honest with you, Ethan, I had no idea about how to do research in finance until I earned my PhD, maybe when I was in the PhD program. So I went to UNT, the University of North Texas, for my PhD, and that's a 4-year program. So in the first 2 years, I did a coursework. I took courses in finance, economics, and econometrics. So that's for my first 2 years. And then in the second 2 years, I did some research. I talked to, worked with many professors, working on some research papers, learn some technique or, how I get the data in the database and run some model, stuff like that. That's how I spend my time in the second 2 years. Yeah, most people wouldn't know how to do this kind of research until they get into the PhD program. That said, Ethan, what you can do is, you can take some, econometrics course, not economics course, but the econometrics course. That is, how you run the regression model like this to, test or analyze anything about economy or finance. That course is available in the, even master level or undergraduate level. We offer that kind of course too in UTD. So that is something you can do in your, maybe when you're junior or senior in the bachelor's program. That is my advice. Then you can continue working on that and learn more. When you maybe go to a graduate school someday, you can take these courses, maybe more than one course, so you can learn more about it. So you can write actual research paper when you are in the master's program. Then if you go to a PhD program someday, you have a stronger position because you have learned that already and have done some paper before, research before, so you have some advantage over some other PhD candidates. Does that answer the question?
Yes, that does. Thank you.
Sure. So any other question? If not, I'd like to talk about topic 2. That is about the finance program here. Okay, let's do it. So again, I'm using a UTD BS Finance program as an example. I'm not trying to promote our program here. Maybe I should do that, but that's my goal here. That's my objective here. I'm just using that as an example. So finance, usually finance can be broken down. In general, finance can be broken down into 2 areas. That is the corporate finance and investment. Corporate finance is about helping your company to make some decision in finance. For example, if the company has some internal project being proposed, your job may be to analyze the company financially and to make a decision about the project. Okay, this project looks good. It's going to make money, going to be profitable. We're going to have a profit in long term, so we can accept it. We can do this project. Or this is looking bad. We're going to lose money, so we should reject it. That is one type of decision you'll be making, or you'll be helping the company to make. It's called capital budgeting. Or you can help a company to issue bonds, issue stock to see how much equity or stock they should be issuing versus how much bond they should be issuing, meaning how much debt they should issue, how much money they should borrow from the banks or investor versus how much stock they should be issuing to have people share their, own their company partially. That is the other type of decision. So corporate finance is one area. There are tons of jobs you can do as in corporate finance. Investment is about, as I said, is about managing financial asset for either corporation, companies, or individuals. Your goal here will be to maximize your profit return and reduce or make the control the risk that you are taking. So for that, you can have many jobs too. Investment bank, you can be investment bankers, security analyst, hedge fund manager, and so on. So there are many jobs in corporate finance or investment, either way. What you learn here at the graduate level is about the same, because either you are in the corporate finance or investment, you have to know accounting. For example, you have to be able to read a financial statement, like income statement, balance sheet, and so on. So you need to understand that. You need to understand the discounted cash flow, meaning, okay, your company borrow money, so your company maybe, your project may be making money or generating some cash in 1 year later, 2 years, 5 years, 10 years, but then how much this much money in 10 years is worth today. So things like that is what you need to know for both corporate finance and investment. So in my opinion, there are 2 areas in finance, 2 major areas in finance, corporate and investment. But what you need to know as a basic knowledge or concept or understanding would be the same or very similar in corporate finance or investment. Of course, they're not the only area. Other areas in finance would be international finance, like foreign exchange market, or derivative, like option, futures, and swap. Those are another areas of finance. So you can take those courses at the undergrad or grad level and pursue that kind of career. By the way, before pursuing a PhD at the UNT, I was working for an energy company for about 10 years as a quantitative manager analyst for the energy trading. So our team was trading energy option, future swap with other companies and also, commodity market or commodity exchange. So that was my job. So again, my area was neither corporate finance or investment, but was a derivative before pursuing a PhD. Then, after getting a PhD, I'm teaching mainly about corporate finance. I'm teaching a foundation course in the BS Finance and MS Finance, excuse me, MS Finance and MBA program. So I'm focusing on the corporate finance as a teacher right now. On top of that, we also have an area called real estate and risk management / insurance. Now, these are not really finance, but at many universities, these two areas can be or tend to be under the finance program or finance department because they're similar. What you need to know or what you need to learn is a bit similar, actually. That's why. Now, some schools like UNT have an independent separate degree program. Like that school offer, bachelor undergraduate degree in finance, real estate, and risk management. The different program, but many schools like UTD combine, finance, real estate, and risk management into one degree program. So in my program, our program here, you'll be earning BS Finance degree as a degree eventually, but then within the degree, you can choose a track. So you'll be, okay, I'm pursuing a BS Finance degree at the UTD in corporate finance track, investment track, real estate track, or risk management track. So depending on the track you choose, you'll be taking different courses, like courses to design to train you to be a corporate finance manager or investment banker or so on. So that is something we do here. But again, some other school may have a different program for finance, real estate, and risk management.
Dr. Nishi, sorry to interrupt, but is it possible for you to accept some people in the waiting room?
Oh yeah, is that okay? Is that me? Okay.
I think if you go to participants, so
yeah,
I can't do it anymore because I made you the host. So.
Oh, is that right? Okay. Yeah, let me hit the admit all. Yeah, they're joining now. Sorry about that. I thought you and I are co-host, so you have the same control, but maybe not. So okay. Yeah, sorry about that. We don't use Zoom at the UTD, so I'm not. I used to use that, but I'm not. I just forgot what to do. So sorry about that.
It's fine.
Yeah. Okay. Yeah. Thank you, Ethan. So let me talk about the careers in finance. Let's sip some water here. Sorry. The average salary of our graduate in the first year is $63,000 last year. It's pretty good actually. It's much better, not better than other degree plan in business such as marketing or human resource. I think IT had a better salary in the first year after graduating a BS degree, but otherwise, I think finance graduates have a pretty high income. I'm not trying to talk about money only, and that's not the only thing you're looking at. I know that, but that's something I want you to think about. How much income you can earn, how much income you can have upon graduation. So again, the finance graduate tend to have a high income or higher income in the first year. Okay, let me hit the admit here. And many graduates from our program got a job in a top financial firm, like Bank of America, Goldman Sachs, JP Morgan. Of course, not everybody, but these are top financial firms that our graduates have done either internship or and full-time job upon graduation. Let me talk about the skills that employers are looking for. So of course, finance tend to be math-oriented more than other areas in finance, other areas in business. So you gotta be good at the math and stat. And that's something you can work on even now at high school. You can focus on, you can study harder or math and stat because that will help you. You can be good at algebra, linear algebra, and calculus. These are 3 areas in finance, areas in math that can help you a lot. That plus stats. So these are all important in finance. And also Excel proficiency, that's important too. Now, let me talk about this. 20 years ago, when I was at the school, way before my PhD time or working for the energy company, 20 years ago, if you're good at math, stat, and Excel, if you know how to use Excel better than other people, that was enough 20 years ago. No anymore. I talked to many employers because of my job, let me admit. I have a chance to talk to many employers in finance because of my job, and many people told me that they look at the math skill, Excel skill, of course, and they look at the other skills, programming skills, such as Python or R. So it's not like required for you to graduate, required for you to get a job for your first job upon graduation, but it will help you. If you have a skill like Python or R or Tableau, even Tableau, that will help you. That will make your resume look better than resume from other people. So that will make your resume stand out when you apply to any job, either internship job or full-time job. You have a better chance to be invited to an interview. And you have a better chance to be, to have an offer on a job. So that is something you can look at. You can think about now because Python or stuff like that. I mean, you can even start learning even now, actually, even before you go to start going to college. So that is something I recommend you. The other thing is skills, analytical skills in finance, either corporate finance, investment, whatever. You can learn that, and that is something you can learn at university. And that's something we can offer. We help you learn and earn some skill or knowledge through financial course here. So let me talk about the courses we offer here. So again, I'm using a Blue Science program at UTD. Okay. Yeah, you can mute the person, whoever it is. Maybe I can mute. Oh, I don't know who that is actually. Yeah, I don't think I have a control here. Maybe I do, but I don't know. It's all right. I'll just skip talking. So these are courses we offer in the BS Finance program at UTD. Some are required, meaning every finance major has to take that course to graduate. Some are elected, meaning they can choose a course as elected and count that course toward a degree. Of course, we do offer many other courses, but then I'm listing the courses that are very typical courses that many people take, or rather, what I consider traditional finance courses. So these are courses that many people take. Getting loud, actually. You know what? Let me try. Oh, let me do this. Let me hit this button. Mute all. How's that? Okay, good. Nice, quiet now. I should have known that. Sorry about that. So anyway, these courses are required or elective. Plus, there are many more courses we offer in the BS Finance program. Now, these courses use Excel or teach Excel. Finance 3390, 95, or 4345, they teach or focus on teaching Excel and other things. Like this course even teach Tableau. 4345, I know they instructor teaches Excel and Tableau in the course. I happen to be the one teaching 3390 in undergrad course, our program in BS Finance. And this course, yeah, I do teach, foundation type concept in corporate finance and investment, but we do every single problem or work some calculation using Excel. We don't use a calculator or any other method, only Excel. That way our students learn how to use Excel, either Excel function, built-in function, or some kind of tool like GoSeek or Server or regression or other tools in Excel to analyze anything about finance, corporate finance, or investment. That's what I do in 3390, and 3395 is the advanced version of the course. So the instructor will be using Excel heavily to evaluate the corporation or firm or any project. And again, 4343, 4345 is focusing on the financial information. It's more like a fintech course actually, and they focus on the Excel Tableau too. Now, we don't have a course in the business finance or financial finance area that teaches R or Python. In that case, you can take this course, ITSS 4381. This course teaches Python mainly. And of course, this course is not part of the business finance program, not in our degree plan, but if you want to take this course, if you join our program in business finance at the UTD, and want to take this course as a finance elective, let me just admit, want to take this course as a finance elective, yeah, I will approve it actually, because this course could be very useful for you to learn about finance, do some analysis, and get your job upon graduation. So yeah, this course and other IT course are good course to take as finance elective here. Let me talk about the Career Management Center. At the JSON or School Management at the UTD, we do have a Career Service Center. It's called the Career Management Center, or CMC. That is a career service department only for business school or finance business student here. So they have a website like this. Let me show you that. So this is their website, and they host many events. So I want you to, once you go to college, I want you to pay attention to any website or email from the Career Service Center, and attend event such as career fair, mock interview, or resume writing workshop. Again, each school, each university hosts a tons of a career fair or event to help you networking and learn or make your resume better, or learn about any job opening and apply for job. So for example, for our Jinzo school only, the mini event like this, April 26, 28, May 4th, 5th, 10th, the many events lined up for our business school, business student here. So again, I want you to pay attention to the website and the event hosted at the university or school, or business school, or any school you'll be attending in the future, and pay attention to email from the university, and try to attend as much events as possible, as much as your time allows, because that is the best way to find a job, find an internship job, full-time job, or networking, other professors, staff, or employers, future employers. So that would be my advice. Okay, let me talk about this guy a little bit. Again, I don't mean to promote our program too much, but we at the UTD or Jinzo School Management, we try to promote our each program, finance, accounting, and other, and try to help our top student to basically for them to compete at a top university in Texas and nationwide. So we do have something like that, like this. Let me admit. We have a professional program in finance, or PPF. So basically, this is the honors program only for finance undergraduate student. So we recruit top student every year, every fall. So our director in PPF, not me actually, but our PPF director, who look at the application every fall, interview some candidates, applicants, and pick maybe 25 to 30, maybe 35 each year, and should be training or should be mentoring and training these PPF members. We have about 55 members right now in the undergraduate BS Finance program, and they're going to, some are going to graduate this May, some are maybe next May, and so on. So those guys will be trained, specifically, to train to do maybe more advanced analysis in finance, and have a better skill to write a resume, more networking, because the past PPF members they got a job at the top school, a top firm like a JP Morgan or Morgan Stanley. That's the employers who hired our PPF members. So those guys have opportunity to network with our PPF alumni who are at the top firm in finance. So that is something we have actually to promote or help our top finance students and compete other top school like UT Austin or SMU or Rice in Texas or other like a top school in East Coast, West Coast. That is something we're trying to do at the UTD. One more thing, I think. Oh yeah, here. Our program, not our program, but at the Jinzo School of Business or Management, we have a finance training lab. It's a lab designed for to help you analyze or do some project research or do some course assignment. We have access to Bloomberg, Capital IQ, Refinitiv Icon. This is a database I was talking about. So I got the ESG score from this database. So let me run some video they made for me.
Hello everyone. We welcome you all to the Naveen Jindal School of Management Finance Trading Lab.
This could be too
Our
loud.
lab provides students with the opportunity to develop financial analytical skills, trading simulation tools, and provides the students and faculty with access to various business databases. These databases include Thomson Reuters Icon, Morningstar Direct, Bloomberg, S&P Capital IQ, FactSet, and Wharton Research Services. We provide access to various platforms.
So I'm not going to run the entire video here. It's a bit longer, but basically they host we have access to the database, like the databases. So students here, faculty and students have access to the databases, get the data, and do some research or assignment. Bloomberg, Capital IQ, that might be common for many universities. As far as I know, not many universities have access to Icon here. That's something I'm glad that we have access to Icon because Icon has a ton of databases, stock market, not just the stock market, the bond market, but other commodity prices, like energy option price, futures price, or ESG score, many data in business finance in general. So that is something we offer at the UTD. So that last page I have here. Okay, so that's my end of my last presentation on part 2. Do you have any question about business school or finance program here?
Yeah, so I think this one goes back to your research. Someone in the chat asked, how do you check to see if the data you get fits the model?
Let me open this. Hold on. Yeah, sorry about that. I wasn't paying attention to the chat screen.
It's okay. So basically the question is just, how do you check to see if the data you get fits the model you create?
That question can be interpreted in different ways, actually, meaning let me get back to that. Okay, let me go back to the page, actually. I'm trying to think how I can answer the question. So this is the score I had here, and this is a database, and this is the model I use here. So this score, and let me just show you. The score looks like this. So this is a score or a database. Data I learned. I got from the Icon, different Icon. So firm ID, firm name, type of score, and these are scores, emission score of this company in this year, this year, this year, this year, this year. So the question can be, can be interpreted many ways actually. One is a ESG score is a right score to show the firm's effort to reduce the emission, stuff like that. That is yes and no. So this is my question, right? Such question here. I'm using this score. These scores as as my proxy for firms effort to make an effort on the reduce the emission. I attend some conferences, and some people attendee or discussant told me this. Okay, the ESG score may be a good way to, maybe one way to, approximate, firms' effort or amount of investment they're making, but that may not be enough because that includes many other factors, many other things the company is doing. For example, if the company CEOs, talking about emission a lot or the effort a lot, they're touting about the company effort in public, then that may boost the emission score or ESG score a lot. Rather than that, want to look at the actual amount of money the company is spending to reduce the emission, or one person from the, I think one person from the journal in finance actually told me, want to look at the actual amount of emission the company is polluting each year, I use that as a proxy or as a dependent variable in this model. So to answer the question, actually, I don't know. We wouldn't know what is the best indicator of the thing we want to analyze here. That's why many researchers use different variables. So not just the ESG score from Refinitiv, but the score from Refinitiv, Bloomberg, or another database called KLD. So many people use multiple databases for the same variable, that being emission score, or different indicator such as emission amount or data amount, which again, we don't have access to data amount here, but that is something we can do. So answer the question is, we wouldn't know what is the best indicator or proxy for what you want to analyze. That's why we want to get different data and try to say, okay, in this test, we see some result. This test, using this data, we have a similar result. This test, similar result. That way, we can say we have a strong result here. It's called robustness check. I hope that answers your question.
Thank you. And another question in chat is, which courses in the undergraduate finance program do you think are the most difficult?
Good question, because that is a question I get a lot from our students. In my opinion, personal opinion, the course in investment tend to be harder than corporate finance. The reason why the investment tend to be more math-oriented. For example, you have to know that you have to know Excel, you have to know math, you need to know math and stat. You need to know calculus, for example, or linear algebra, meaning you need to know how to multiply vector of something and the matrix of the variance, of the covariance, of the stock price return. That is something you need to do in investment. So in general, investment course will be harder than the course in corporate finance in general. On top of that, I would say some courses in the option of futures called derivative tend to be harder because again, option, for example, to calculate the option price, you need to know calculus actually to do some Black-Scholes model or something like that. So you need to be good at the math and stat. Now, many people are not comfortable in math or stat. So many students in undergraduate program tend to find courses in option, futures, or investment in general harder than the course in corporate finance. I hope that answers the question. But again, that is a common question I'm being asked by many people here.
Yes, so I also have a question, which is more of your opinion. It's just like in the future, how much do you see like finance and these related jobs growing compared to other jobs? Just how do you see the growth of these type of jobs?
Oh, that's a good question. I have something here which I didn't read actually. So the government agency, the Bureau of Labor Statistics, is expecting, projecting the financial analyst job, not just a finance only, not the general finance, but the financial analyst job to grow at the 6% level each year from, I think that each year from 2020 to 2030. That's pretty significant. That's pretty big, but compared to other jobs, I actually don't know. But the one thing I can tell you is finance in general is leaning or leaning toward IT more and more each year. And that's what you guys are more, focusing on as association too, at the DataRizon. And if you think about or including the job that's partially related to IT, partially related to finance, I think that area is growing really fast right now. It's been growing a lot in the last 10 years, and I think that's going to continue to grow even faster at a faster rate in the next 5, 10, 20 years. So I don't have a number of stats here, but if you think about the IT plus IT combined with a finance job, that is a way to go maybe, because there's a huge demand by industry, by employers. You may be on demand, and again, you may be in a better position to find a job more easily or find a better job, better in terms of the company you'll be working for, or job environment, work environment, or maybe salary. So that is an area growing a lot actually. So to me, the finance and IT is growing really fast compared to other areas in finance. That is my take.
Thank you.
Any other questions, guys? Anything about the research I did? Again, I'm not a strong researcher, but I do some. But so I'll be happy to talk about research I did, or anything you may want to know, or you may want to hear from me, or I can talk about our program, the BS Finance program. Maybe not.
There's another question in the chat. So
how
can high school students participate in finance research?
That is a good question. Good question. The answer is that you can, of course, you can. What you can do is send an email professor at each school, either finance, accounting, whatever the area you are interested in, and see if they can do let me admit, if they can do any research with you together. So answer is yeah, you can, but it may be difficult for to get a good, favorable response from the professors, because faculty is busy. They're busy teaching or some admin job like I do. I be being serving as a director. So I spend about 90% of my time as a director, not as a researcher or teacher. So that just depends on the person or a person you are contacting. But many professors have something already. They have a lot on both hands for admin job, teaching, and research. But try to show your passion. Try to show who you are, what you have been doing, and show your passion in finance, or explain your need. You want need or your passion. You want to do some research, this research with you because you have done this research. You're a perfect person for me to mentor me or for me to work for. So that would be my advice. So yeah, you can, but we don't have as far as I know, we don't have a program designed for faculty and high school students to work together for any research project in finance. We don't have that. Maybe I can propose that to our dean here, but we don't have that. So one thing we can do is again to email some faculty members. By faculty, I mean professors in finance at UTD or other school individually, and show your passion and try to ask for help or their help, their assist. That would be my advice. So I have a similar question. Summer program for high school. Yes and no. We do. Let me promote. We do have something called a top trader competition, which I'm actually host. Actually, I'm hosting that competition. It's an online trading competition designed for high school students, so nationwide. So anybody in the US, in this country, can attend, participate in the competition. What you do is, you will be in the virtual trading platform. It's called a stock track. You'll be trading stock and ETF, exchange trade fund, and to get basically to make money. So your goal is have a higher return or higher amount of money in your pool than other people. So that game will be running from early June to end of July, and at the end we look at the top 3 and give you some catch prize at the end. That is one thing we're hosting. So you go to go and type JSOM, JSOM. That means Jindo School Management. JSOM top trader, either top trader or high score training competition. You hit the web page that we're hosting. That is something we can do, but you need to pay some fee for that. It's a $50 fee, or if you register and make a payment before the end of May, you can get a 25% early bird discount. So that would be about $37. So that is something we host, but we don't host any summer camp or summer program like as a course or class for high school students to learn about finance or analysis. That we don't do that in finance at the UTD. Sorry, but something we can think about in the future. Any other question, guys?
I think if there are no more questions, I think maybe this is a good spot to end. Oh, actually, so someone asked, can you share the link for the trading thing, the summer trading programming?
Yeah, let me do that. Hold on. Let me just do a Google JSON top trader. Yeah, that's a good idea, actually. Let me just do that now. Okay, hold on. Here we go. Let me paste on the chat screen. Okay, here you go. That is a web page we are hosting. So you can look at poster here, and there's a page, there's a link that said register now, and we go from there. I'll be hosting some workshop in end of May or maybe early June, right before the competition starts, to go over some rules. And I'm inviting a guy from the manager from the top track, stock track, that again, that's a platform that'll be hosting some kind of system for you to trade. And I may be hosting some other people to speak about finance or financial market in general. So that is a workshop I'm planning right now, and that will be at end of May or early June. Any other questions, guys? I think this is a good time,
Hold on. I think someone's just asking for general information for parents who have children who want to join the field. Just any general tips, things like that.
Good thing I can do is, I think you can contact for any school, for JSON or Jindo School Management at the UTD. You can contact the recruitment office. Let me just check that. Let me just type. I think this is it. I think this is it. So each school, not just university, but for example, at the UTD, we have a recruitment office for that JSON or for the business school, only for business. So they host some kind of campus tour or some session, and I do actually meet the parents, meet prospective student who are thinking about joining UTD next year, and I meet the parent to talk about program. So that is something you can do. So contact the recruitment office and ask them to arrange a meeting with some of staff or program directors learn about the program or school. That way, you can actually come to the campus to see the campus, because it's important for you to see the campus, actually to be on campus, see the building or campus in general, and to the neighborhood, to make sure that's a safe area and a nice building, a large enough building. There's some dorms, apartments for students. What kind of staff we have, directors we have, faculty we have, and talk to some faculty members or directors. That would be important. So that is the best thing I can recommend. So again, talk to recruitment office and set up a meeting to see us. That is something we can do. By the way, we have a new director of the recruitment for JSON. He just started last week, I think. So under his leadership, many things are changing or improving, I think. So we try to make it better and better, make it more accessible for you guys, high school students or their parents, to come here to see, what we do here, who we are, and what we do at the JSON or UTD here. So that will be improving, in my opinion. That will be getting better and better in the future. Any other questions? This may be a good time for you to ask me a question because I'm here. You can ask me any question, not just what I talked about today, but just any question. Any question about anything I may know, actually.
Okay, so yeah, I have a question about just going into college, getting your PhD degree. Is there anything that you wish you could have done differently that would have made it easier or better, something like that?
Good question. That's a good question. Yeah, there are a few things I can share with you. Now, this is pros and cons. So I got an MBA in finance, got a job at the energy company. And I worked for the company for 10 years. So by the time I applied for the PhD program, I was late 30s. I think I was 38 already. And again, pros and cons. Pros, I'm a professor. I have a PhD in finance, so I know how to do research, how to teach, and I have some industry experience. I have some experience in industry. I worked for company, corporation, as a quant manager. I was working with my traders, so I have a mix of two experience, research experience and industry experience. That's pros. Cons, I'm not very young. I'm like 30, for example. So what I wish I could have done, or maybe I could have done differently, is I could have gone back to school earlier when I was early 30s, maybe 32, 33, maybe 5, 6 years earlier. That could have been different, but maybe not. The other thing is that this is something that you may want to think about. When you are at the maybe master level, say Ethan, you are pursuing, I think you are, thinking about finance major. So let's say, you are in the MS finance, master of science in finance or financial engineering or financial mathematics program. When you are there, try to work on some research paper. Ideally, work with some professor in your program to work on, maybe, if the professor doesn't have time, work on your research paper, some research, and ask the professor to be your mentor, or maybe, kind of give you advice about your paper. Then try to either publish, if you can publish the paper before your graduation, that's the best. That'll give you a strong edge against the other candidates who are applying to PhD program. Even if you don't publish, you have something, right? So that is something you can send, because many PhD programs ask you to submit a GMAT score, your statement, recommendation letter from professors, maybe 2 or 3 academic recommendations, and the paper you have written before. So at that point, you already have a paper that you have written, and get some receive based on some feedback from your professor or mentor. If you have published a paper, that's even better, because you can talk about that in your statement. So that is something I wish I had done. I was just too busy working as a quant manager and didn't have time to, or even didn't think about research paper. But that is something you can do when you are at the graduate school and before you apply to a PhD program. Does that help, Ethan?
Yes, that helps a lot.
Good, good. I think your father will tell you the same thing actually, because he's a professor. He was my professor, so I think he will tell you the same thing actually. Try to do some research before you apply for a PhD program. That's the huge advantage for you. Any other questions, guys? I'll be happy to answer any question, anything about undergraduate program, even PhD, because I was a former PhD student. I can talk about that, or energy company in general. I can talk about that a little bit, because although it's been 10 years since I left the company.
Yeah, actually, I'm a little bit interested in that. Just quick, like, what did you do at that company?
The company. So I was not a trader. To be more, using term, I was not also a trader, meaning I was not trading, talking to traders from other companies, energy companies, or doing something at the exchange, but I was a quant manager. So I'll be sitting next to the traders. So they're trading and they'll be asking me some question. Hey, should I do this? Could I do this? Or do you think this is a good strategy? They will ask me a question, or maybe I have a question. Hey, Joey, you're taking too much risk. Why don't you offset some portion here because you're taking too much risk from this portion, that market. So I'll be looking at their portion, strategy in general, or amount of risk they are taking based on the measure called the risk value at risk VAR, and make some advice. That would be my job during the day. Then afternoon, after they finish trading, I will make some report showing them how much money they made or lost each day, and the level of risk they're taking in their portfolio at each day, and report it to their boss, who's the director or VP of the trading, and send the same report to the company CEO, CFO, those people. And they may ask me a question. Hey, Hiro, what about this? What's going on here? Would you explain this to me? That was a part of my job. Yeah. So I wasn't trading, but just helping people to trade better, more efficiently, or maybe try not to take much risk. That was my job. Does it help?
Yes, that does. Well, Phil, you asked me, so I can ask a question about anything, right?
You can, yeah. Anything I may know, yeah.
You know how Netflix have dropped a lot these past 2 days, right?
I wasn't paying attention. Is that right? Netflix?
Yes.
I haven't been paying attention actually because I've been so busy here. But so they dropped a lot?
Yes, I think about 30% in the past 2 days. So
is that based on the quarterly report they just had,
yeah.
maybe? Or the quarterly announcement, right?
A lot of customers. So I just
Wow.
Curious.
I don't know. I mean, my guess would be maybe because pandemic is over, maybe. So people are trying to discontinue the subscription, maybe. They're leaving the Netflix, maybe. I don't know. That would be just my guess because I don't even know about Netflix stock market or stock price. It's just news to me. But yeah, my guess would be the pandemic is about to be over, maybe, if I'm not mistaken. And people are no longer spending money to watch movie, whatever, at home. They rather go to movie theater, maybe. I don't know. That would be my guess, but that's something that anyone can guess or can say. So I could be wrong easily. I don't know. Some people are staying here. I see a dozen people here. So they may have a question, right? Otherwise, you have we have nobody here. Oh, yeah. Thank you for coming. Thank you for inviting me.
So I think maybe we can wrap up here. I don't know if anyone else has any questions, but thank you everyone for coming. Thank you everyone for listening. And of course, thank you, Dr. Nishi, for your time and giving this talk to us.
Yeah, thank you for inviting me. I enjoy talking to you guys, and great questions for you guys from you guys. So I appreciate this opportunity. Thank you, Ethan, and thank you guys for attending this. Thank you.
And I think since you're the host, I think you need to end the meeting. So
okay, let me end the meeting. All right. Thank you guys, and have a good night. Bye-bye.
Bye.